If your P&L keeps last month's revenue and expenses you didn't close, and your next month is already contaminated. Let me show you clean closing entries examples fast. I'm a US CPA and I review closes where this exact thing breaks reporting. What you'll learn: which accounts get closed, 2 closing entries examples with numbers, where income summary fits, what reviewers check before sign off. Step 1. Close revenue to income summary. Example 1. Service revenue equal to 120,000 credit. JE debit service revenue 120,000 credit. Income summary 120,000. Step 2. Close expenses to income summary. Example 2. Rent expense 18,000. Payroll expense 62,000. JE debit income summary 80,000 credit. Rent 18,000 credit. Payroll 62,000. Step 3. Close income summary to retained earnings, owner's equity. Income summary is now a 40,000 credit, 120,000 to 80,000. JE debit income summary 40,000, credit retained earnings 40,000. Step 4. Close dividends draws. If dividends equals to 10,000, debit retained earnings 10,000, CR dividends 10,000. Red flags: revenue expense balance is not zeroed, wrong period date, closing posted twice. What to check? Post-close TB has only permanent acts, RE rolls forward, net income matches. Supporting docs: final TB, financials, JE detail, approvals. Reviewer insights: net income tie out to income summary, RE is non-negotiable. Dates matter more than people think. Look for duplicate year-end close batches. Dividends draws often forgotten. If expenses don't zero, your next month is junk. Like plus subscribe if you want more practical close walkthroughs. Drop a comment with your biggest closing entry confusion. If this sounds like your close process, you're not alone. Minus 80K. JE, doctor income summary 40,000, credit retained earnings 40,000. Step 4. Close dividends draws.